Alright, hello. Should be able to hear me. Hopefully, the mic setup is a little better than before. Hopefully, you don't hear any background audio. My mic should be a little more clear. It's a little strange. I can hear all the noises in my house going on because I have my headset plugged into my mic, but I don't think that they'll come through in the audio. So anyways, this is the ES PM session trade review for May 27th, 2025. And I took a couple trades today, more than two. So kind of deviated outside of my quote unquote rules, but you'll see exactly why. It was about two break-even trades, and yeah, anyways, actually we'll just get right into it, so I'll break it down further. So right here we have all the executions, which you can input into, well, this is a good idea, you can input it into ChatGPT, and then it'll tell you it'll just give you a nice little report. So, here are the receipts, whatever. I do have the actual executions on the chart today, which I will be showing. Here is the ESM 2025 monthly chart. So you can see here that it's the same chart that we were looking at yesterday, with essentially an extra day's worth of data added into that monthly candle. So the high and low is still the same, but our focus was this monthly fair value gap right here. So I was saying I'd expect that to act as inversion, and then I was also saying that the best setups will form in the upper quadrant. So I'll talk about that. And right here's the weekly chart. I was targeting this weekly high, and then also the new week opening gaps right here. So this was the first objective. Then I said this new week opening gap high here, and then I would like to see that previous week high. So just additionally, something, if you want to do a very, very safe protocol or procedure, you can also choose this high right here, which is cutting through the candles, and obviously just because that will be booked before that's booked. So now we do have this gap all the way from here, so from this candle's high to that candle's open. If you extend that out, that's potential candidate for sending the ES higher, and that lies right about within that gap, or sorry, that high, about the same, a little higher if not. Here's the daily chart, same thing that we talked about yesterday. First, we were looking for it to dig down into the quadrant, or the upper quadrant. So we were wanting it to go here into this high, then the upper quadrant. It went even further, went to the consequent encroachment, quickly rebounded off of that, and then that's Friday's trading, Monday's trading, Tuesday's trading. So this candle incorporates Sunday, Monday, and Tuesday all in one. You can see that we open, new week opening gap, low right here. So that occurs about, I think it was Sunday, and then Monday we kind of just trade sideways because it was a bank holiday, and Tuesday's trading. Extremely explosive move to the upside. Just like we mentioned, I said that we have this gap right here that I'd like it to act as a reclaimed fair value gap. And I clearly stated that I was bullish. Then I said that the new week opening gap low and the new week opening gap high are my objectives. And then above that we have, well, this volume imbalance right here, and then this high. So here's the 4-hour chart. We have that 4-hour first presentation fair value gap in the form of a buy side imbalance, sell side inefficiency at 6 p.m. So this is the first gap that occurred for the week on a 4-hour basis, and you can see that the reaction to that was very nice. So we had this candle right here. Traders try going short, but they quickly receive feedback that that's not going to work out in the upper quadrant, and we attack buy side above here inside that reclaimed fair value gap, and then eventually during the a little bit post New York AM session, it starts to reach for that during the PM session, really. So there's more during the lunch hour going into the PM session. But here's the hourly chart right here. You can see this is a market maker buy model. All right. Next chart, a little zoomed in just for your viewing. And here's the 15-minute chart. So I've just included the daily range high and low of Tuesday. So we have the low right here and then the high right here. So you can see that the low actually forms at just a little bit before going into the true day open. And then London forms a low right here, not the low of the day, because that would be right here, but relatively close, still inside that first presented 4-hour fair value gap. We go all the way up. So I was watching this during London, and then while I was watching it around here, I wanted to go long. I just didn't do it. I was a little skeptical, I guess. Not skeptical, just cautious. I said in yesterday's review that I was going to watch a movie and then clean my room. So I ended up doing both. While I was cleaning my room, I was watching it right here. It was late at night, and I didn't want to force anything without being in tune. So the market then trades higher, trades back down, comes into the Monday 12 to 12:30 a.m. high and low. So that's the high and low formed from 12 a.m. to 12:30 a.m. Comes back down into there, and then eventually works up to that buy side back over there. So also look at the sensitivity to that high of the 4-hour gap. So that's the 4-hour first presented gap. All right, here's a 5-minute chart focusing just on the PM session. Now, this is going to be more focused on the trades that I took and why I took them. So, originally, after the market had rallied far, far above the open of Tuesday, I had entertained the idea of the market coming down into the nearest sell side. So I was just looking for the nearest low-hanging fruit, and I wanted to see it come into sell side around 130. So it was about 120, 130 that I started watching, and there was this gap right here on a 5-minute chart, but I drew it out on a 1-minute. It was the first presented gap for 1230. So I wanted to see it act as a inversion gap, because it was a little bit, it seemed right that it, like the time aligned well with the idea that we had rallied so far up, and then additionally we had touched this new week opening gap low, so I wanted to see it come back down at least into the sell side is what I was hoping for. And in my experience, something I've noticed is like when I'm in this situation where the market has went up and I'm trying to catch a reversal, many times I am, right about it, but then I did struggle with the idea that which sell side to pick. So what I've started doing is just picking the nearest low-hanging fruit, and you'll see why I like the sell side on a 1 minute chart. But if you touch the new week opening gap low, then call that out in the Discord, or just made mention of it. Here's the 1 minute chart. You can see that sell side 1, 2, 3, 4, 5 equal lows right there, and then that one is relatively equal to the pool of sell side here. So I wanted to see it come down below this first presentation gap at 1239. And now that I'm actually realizing this was not a first presentation. First presentation is here, but the idea was I liked this large gap right here, and it was like giving off the impression that the market was going to continue higher at the time. So I wanted to see it come down below it, and I made an exception for it to sort of traverse throughout that range, but I wanted to catch a short inside that upper quadrant. And so we formed that gap, came up into it, and then went down a little bit lower, and then eventually came back up into it one more time, and then treated it as inversion, went higher. So I did try to go short right here off the premise of a market order. So not exactly at that gap, but off the basis of that gap. And so once I saw that volume imbalance, I wanted to go short off the premise of that gap. And so keep in mind, I'm also on my phone and I'm at work, so it's hard for me to really get the perfect entry, so I have to make an exception. And when I'm sort of taking these trades, I'm really trusting when I draw on liquidity. So my main focus is not the exact precision of the entry, although that is a bonus. What I'm thinking is, okay, if the draw is correct, then more often than not, these will hit, is the best way to put it. So my main focus is on assessing whether the draw is correct or not, and whether the market is going to, or is likely to, draw into that area of liquidity or not. And then, well, obviously, right here I took the short, and then I cut it loose right here before it went to my full stop. And I'll show that in a second. But right here is the labels. You can read those. Here's a closer picture. And now here is the visual. So sold one short here. Didn't give the feedback that I wanted to. Although this body closed above this gap right here, I didn't want to use this as the premise because it was too precise almost. Like, I wanted to allow it to move around a little bit. So I was using this gap as the premise to cut the trade or not. So that was like my way of mitigating risk of the trade. And you can see it closed above that, and then I cut the trade immediately right here. And you can go check the labels. It was just right about at that close. So I cut the trade, saved myself more damage than necessary. Then as we come back down right here, I take a long right about in here, If we go back and just check the price, it's 59.29 and a quarter. So there's that. So 59.29 and a quarter, right about here, and right there. So yeah. Then 5 handle stop as always, and now right here, I tried targeting 59.39, but fell one tick short. Waited for it to come back into this gap, and it was not giving me the signatures I needed, which was very difficult. It was difficult. Like, I wanted it to come up or come down into this gap, and by this candle I wanted it to start to trade higher, but it did not do so. So next candle, I cut it short, and then I bought one more after seeing how it went down and then came back and closed in this gap. Bought one more. Alright, cut that one at break even. And then right here, a few seconds later, or a few minutes later, bought one more. Saw this reaction. And at that point, I was just a little skeptical and cautious at the same time. So as it, traded up and created new highs, I cut it short or cut it loose on this candle at a profit. And so that worked out very well for me, because eventually it came back down and reversed, and it didn't come up into that until the 4 p.m. or after the 4 p.m. close. So yeah, there's that trade review. The market worked off very well from the analysis video I posted yesterday, but I wasn't able to go long inside of that monthly inversion or the upper quadrant. So then I waited for the market to come up all the way, touch the new week opening gap low. Then I wanted to go short, targeting these lows. It did not do so. So then I took the feedback and went long right here. Fell one tick short, so I had to cut that around 5 handles or so. And yeah, then I bought one more again, and then cut it at break even, and then bought one more again, and then took what the market gave me and decided to call it a day right there, because I was deterring from my baseline, essentially. So I didn't want to take any more trades at from an emotional basis, or had I even taken the trade and assuming it was a win, it would have been kind of bad. It would have been setting me back in a way, because I didn't have my 3 C's. It's like how I think of it. I wasn't cool, I wasn't calm, I wasn't collected, as I typically am when I first started. Like right here, when I first took this trade, it didn't really affect me. Then I took another trade, and seeing it deliver one tick short, I was aware that that could affect performance, and so I let it come back down into here. I locked in profits, and then took another long, cut it at break even, took another long, took what I got. And so so that's it for today. Don't think there's anything else. Well, there's all of these trades right here. This was like my stop and limit for the second, or technically third trade, but second long. So I was targeting one tick above that. So same thing, 59.39. 5 handle stop. And then the next trade, this one I'm happy about. It was 59.34. Caught the low of that candle. It pumped, rejection block right here, took my profits, and I saved myself an eventual full stop out. So holding through all of this would have just ran through the mental capital. And so I'm glad I'm glad with today's performance. I don't really like to look at, ended green today or ended red. I'm just kind of trying to sort of align myself with price. And that's where I found most of my consistency, is by just looking at price and not the trades. Although I'm not like oblivious to the trades. I just like to think about price more. And inside of that, obviously, is blended in the trades. But, analyzing these buy and sell points for me is not as conducive as seeing where the liquidity is, why it's there, and how it's going to reach there. So, that's maybe why I feel like this video was just a little lower end production. But it's really hard for me to also record the videos when there's like a lot of background noise going on. I don't know if you can hear it. That's something else I'll just have to desensitize myself to. So yeah, that's it for today. Here's my current YouTube channel, which you're probably watching this on right now. This is the analysis video. This is the trade video. This is another trade video and another trade video. This is an analysis video, and then this is a logging exercise. And these are all the live streams that I did. It's been a while since I've live streamed, like I said. But the idea is I'm at 83 subscribers right now, 42 videos. If we can get to 100, that would be pretty cool. And I'd appreciate if you're watching this right now to subscribe. Stay tuned for the future journey. Much appreciated. And so if there's anything else, oh yeah, I will be posting the trades that I took, the recordings that I took on my phone. So I was going to do it before, but then I figured that it would make more sense to just do it after, because I still have not edited them. So I wanted to get this recording out first, and then I'm just going to follow up with the trades. It's going to be in the shorts section of my channel, which is not yet created because I don't have any shorts out. So this is going to be the first YouTube short that I'm posting. And if there's anything else, now would be a good time to remember. Yeah, no, that's it. So just like and subscribe, and I will see you soon.